All right, welcome everyone. This is Bob Maurer. It is Thursday, the 29th of January, around about 12:15 my time. I want to do a deeper dive into a strategy that was started a short time ago, but I want to get into the backstory on this one. It's the RBOB bull spread, strategy number 343. So let's hop on over, take a look at it. Down into the portal. It is this one right here. So it's the May versus July RBOB. And we'll take a look at how this one has evolved. Should be in it already. It's been about a week and a half or so since the seasonal window started, but at least I wanted to give you the backstory on the same page. And you'll know why I published it. So here we don't have it here. Okay. So strategy number 343. Bull spread in the RBOB unleaded gas, long to May, short July, margin requirement just shy of $700. Risk reward profiles, regular entry, more conservative, waiting to get in down at level 2, risking 332 to either make 1125 or 1432. And then the way the math worked out, if you're an average in trader looking to get in at both levels, and you do get in at both levels, the risk would be 865 per two lot that you average into, either make 2049 or 2662. And then if all you do is get level 1, and then it rallies up to the first target, the game would be about 900 bucks. So that's the risk reward profile. Backstory on this one is it's been a profitable strategy this time of year, 13 out of the last 15 years. The two losing years were 2016 and 17, so 2 years in a row. However, I didn't see a whole lot of similarity in terms of the incoming price for the spread that we have here, which is 456 relative to back in 16 and 17 where the price was lower. I didn't see a whole lot of correlation there, but I did see correlation in terms of the general structure. Just the whole, generally speaking, sideways to buoyant moves do kind of line up. So if that is cautionary for you, then I would recommend strategy. But I like the way the back data sized up, and I am therefore published, or I therefore have published it. So one other data point is that the worst this strategy had been on an unrealized basis over the last 15 years was a negative 987. So at one point in the past, the strategy was losing 987 bucks. And we have a benchmark to stop. So our benchmark is 456, our stop is 221. Our benchmark to stop price is roughly 230 times 420, which would be over that 987. So relative to looking at it historically, that we should be giving it ample amounts of room between for between our stop price where this thing, or our stop price where we have our stop at 221, sorry, and our and the actual start point for the seasonal window. Hopefully that makes sense. So we're giving it more than enough room relative to the last 15 years. Worst possible scenario in terms of the unrealized loss based on the close. So, with all that said, we're giving it ample room. I like the bull side of this. I like that it was climbing higher going into the seasonal window. We're looking to get price improvement anyway, so it wasn't like we are just going to buy it right at the benchmark. That turned out to be a smart move. Two entry levels. Tactic here is to buy at entry level 1, which is 347, and then again down here at entry level 2 at 300. Obviously, if you get both of those, it'd be an average of about 324 for the price. Stop down at 221. Targets are up top here at 568 and 641. I fortunately was looking at the 200 period moving average, which is this white line here. Held pretty good so far for a bounce. So today's move is a little bit sketchy, but so far for a bounce, and we should be filled. So I see those who had their bids in at 347 based on what was on the PDF. The sheet, the strategy sheet, should have been filled. The 300 bids are not filled as of yet. So that's that. So we've seen this market rally. into new swing highs a couple weeks ago, a couple trading weeks ago. Break pretty hard, hold the white line there, and we're seeing a bit of a bounce right now. Today's high is 440. 440. Oh, so almost got the break even on the benchmark. The market right now is sitting more towards the day close. We do have the FOMC meeting, which the results of which should be announced in about 40 minutes. So this could be impacted by any kind of forward guidance that the Fed may give in terms of inflation or non-inflation, hawkish, dovish, you name it, and when and if what they might do, if anything, for interest rates and how that could trickle its way through the commodity market. Right now, currently sitting with some level of unrealized gain for level 1 traders, not in yet for level 2 traders, and we'll just see how this plays out. So that is the story. We've got the risk reward levels here, dollar value. We know the backstory on this one in terms of how it's done in the past, and a little bit of my methodology in terms of why I published this one, and then also got our entries and exits all set. All right, so that is strategy number 343, the bull spread in the RBOB unleaded gas. If you have any questions, comments, anything of interest, feel free to let me know. I'm going to leave it there. And thanks so much for watching.